Welcome everybody to this afternoon session. We're actually going to dive into something, I don't know if you've had a session so far to discuss it, but we're going to go inside the boardroom. So who of you is a startup in here? Do you already have a board in place? Okay, good. Who of you is a board member? Okay, how are you enjoying your job? Okay, great. I love it. So we have a good mix. The idea of the session is a bit today to look into how you can navigate this and from the startup and also from the board member perspective. And we have two great panelists joining us. So it's Jennifer, and you're also at Swisscom Ventures for a few years and sitting on several board seats, and Ale from Ace Ventures, who's also on several board seats of startups that they've invested in. So the two of them are going to basically discuss a bit the nits and grits between it, and we're going to open up for Q&A at 1:45. So I really encourage you to have an interactive session. Okay, great. So let's get started. Jen, tell us, who are you and what does Swisscom Ventures maybe do, so we can actually have a primer to your background?
Sure, like to start with the easy ones. So hi everyone, I'm Jennifer McCloskey. I'm an investment director with Swisscom Ventures. We invest in B2B software, AI, and deep tech companies. We're doing tickets between 2 to 10 million, so we're active from sort of seed to Series B, Series C stages. So really sort of guiding companies through early stages of product market fit to scaling. And we have quite a few in the portfolio that have gone from 10 million to 100 million ARR. So that's what we like to do and like to see. I've now been on 7 boards in total, or had experience of 7 boards in the UK and in Switzerland, from kind of pre-seed to Series B, Series C. So that's the perspective I'm bringing today.
Great. And they're spread across different geographies, right, Jen?
Yeah, indeed. Yeah. Mostly Switzerland and UK, but can also be US. Yeah.
Great. And Ale, how about you?
Hello, everyone. Thank you for inviting. First of all, always great to share the panel with the great friends. I'm Ale, principal at Ace Ventures. Ace Ventures is a Swiss-based VC firm. Today is split between Geneva and Zurich, investing early stage, seed and Series A in Swiss technology startups. Our entire investment thesis is on Swiss talent, so we don't care where the Swiss talent is building their companies, as long as it's been educated in one of the Swiss universities. We originate from the venture arm of Ace & Company, Ace & Company being a larger boutique private equity firm headquartered in Geneva. And originally, Ace Ventures was run through the venture arm of Ace & Company. Now we're spinning out of that. What can I tell you? We started in 2013, made over 100 investments since then across 3 different funds, sitting on a really good track record. 12 of these seed investments became unicorns. Last week, we just had a new announcement. One of them is a decacorn, so we're very happy. Thank you.
Eating popcorn and
No.
I also be your journey. You're a startup. Okay.
None of this is unfortunately my making. I would love to say that was the company that I picked. I was not. Nevertheless, this all changed 4 years ago when I joined Ace and when we launched Ace Ventures. And today, Ace Ventures does exactly that. We invest early stage in Swiss technology founders out of our latest fund, which is an 150 million seed and Series A fund. So we continue to invest globally. That continues to remain true of our DNA, but we like Swiss founders.
Great.
And speaking of boards, yes, since I joined Ace, I led 9 investments end-to-end from source to full execution, sitting on the board of 3 of them, and then I inherited a 4th board.
And they're also they're in Switzerland? Or?
Yes, actually the 4 companies, 2 Swiss, 3rd between Switzerland and the US, and the 4th one is in Europe.
So for those of you that don't know board seats, I'm asking this because depending on the jurisdiction, it has very different implications for the board members. And in Switzerland, I always say in German, mitgehangen, mitgefangen. We're pretty liable for if shit happens, but we're going to talk about it. And in other jurisdictions, we're a bit more free to operate. So let's dive into, the first, the ones of startups that have a board members, right? When you select them, you're not really quite clear of whose interests they're going to represent. They always, like, when they want you on the cap table, they're like going to say, oh, we're going to do everything for you. But sometimes maybe the mechanics over time change. So I think this is really interesting to navigate these dual interests, right? Because in the end, both of you have sometimes a bit of conflict of interest that you have to manage because you're representing the investors, but you also have the startup at heart. So how does this actually, when you enter the board at the different stages you invest, what interests do you have at heart? And also maybe which conflicts you run into and what changes when the company grows, right? Because if the company grows, they also sometimes push you as early investors out of the board. Then, if the startup comes to exit and you're not on the board anymore, like your negotiation power will also sink. So walk us through maybe this conflict of interest and how you start and with which interests do you have in your startups, and maybe bring along an example. Are you on, I don't know, Ale, you're on the board of Adaptive Bio?
Yep.
Yeah, because that's our mutual investment. So I was like, maybe you can tell us, what are you looking at Adaptive Bio at the moment?
Well, there is no conflict there yet.
Okay.
And I'm really hoping it's going to stay that way for the foreseeable future. I can give you one example, so to make this very practical, of a conflict that we often run into, which is, I would say, when you, as a board member, you start to realize that the company is going well, it's going okay, but it's not going to be the venture scale type of return that you did underwrite, right, when you made the investment. That is a common one, especially when you invest early stage, seed and Series A, and then the company develops, but at some point it's really clear this is no longer going to be the multi-billion-dollar outcome that you were hoping for as a VC investor. And so that is where I think oftentimes you start to have a conflict, because as the company evolves and grows, or lacks thereof, like the growth factor, then you start to think about ways to exit the company and potentially even sometimes suggesting the founders to start to think about a potential sale. Right, selling the company to potential interested buyers and all of that, which of course will be in the best interest of the VC fund that you are investing from, depending on where the VC fund is on the investment period and all of that, because obviously the one capital that is invested in the company has an opportunity cost that could be invested elsewhere. So there is that element. And then on the other hand, you of course also want to do what is in the best interest of the company itself, the founders, its employees, and ultimately you are trying to represent all shareholders. So
how do you apply this pressure then at that moment when you? Basically you're saying your portfolio startup basically went off the gas or something went wrong. what's the Ale strategy? So for people that don't know her, she's quite on fire. So I can imagine it being uncomfortable at that point in the boardroom.
I think it's look, first of all, everyone sitting at the board needs to agree. Like it cannot be one person deciding, okay, this is it, and I'm out. So, and by the way, I would also add at that stage, typically all board members start to see it more or less the same way, and then it becomes evident, particularly when you've lost faith in how the founder is executing and all of that. So it's important to raise that.
Yeah, although it does depend when the investors have invested, right? Because a common thing is when early investors are ready to go and exit, but later investors might not be because they invested at a higher valuation slightly later. So yeah, alignment is a key point to navigate.
That is true. That is true too. But I would also add that there is at some point where, can I say, everyone start to see this is no longer going to be the multi-billion-dollar outcome. But you're right, there is different interests, because like if you're a later stage investor, you might have some sort of downside protection or other type of terms that you have, you've acquired as part of your investment round that previous investors do no longer have. So it can be different depending on who you're representing. If by that point you start to have some sort of alignment with the other board members, or everyone start to see it in the same way and be like, okay, this is not going to be a $10 billion company. And oftentimes, sometimes even management and founders do agree with that, then how do you force the conversation? Basically, I think it's more on that. And that actually is a conversation that I had not too long ago with one of our founders, which, I was asking him, what is your personal opportunity cost of continuing this? Because of course, my opportunity cost is very clear. It's like the cost of the capital that is invested in your business. But what about your time? What about the human resources that you're putting into this that you could be putting into something else?
Yeah.
And so for me, one thing we often say, at least we often think a little bit like, fail and fail fast if you can.
And fail well.
Fail well, learn from it. Learn from it, go build something else with the learnings that you made. And I always say to our founder, trust me, like you will see oftentimes if you fail well, if you've learned a lesson and you're ready to apply the lesson learned, you're going to have the same investors backing you again in your second company, your third, whatever you're doing next.
Yeah.
I've seen cases it does happen. So when the conversation comes, I really try to put myself into the feet of the founder. It's like in the shoes of the founder. It's like, that is their baby. They don't want their baby to get taken away from them. I completely understand. And so think in terms of opportunity cost. For me, that is the one key thing.
Yeah. Although we have some companies in our portfolio, for example, that are very cash rich. So they raised big rounds in 2021, 2022, and they have, very little opportunity cost or very little pressure to move on to the next thing. And in which case, and I think what this always comes back to is, it's about your influence, right? And about your relationship ultimately. So how do you bring about difficult conversations with your colleagues in management teams or on boards? And how effective are you at bringing about difficult conversations and getting the outcomes that everyone can be aligned on? I remember in the fund I was working for in London, we actually spent maybe 2 to 3 years working with a founder towards an exit. Initially getting the conversation on the table, which was very controversial, and slowly kind of guiding her towards really helping us arrange an exit for our fund. So it's not always quick and not always should it be, right? It can be a long process sometimes. But yeah.
But I think it's also very important because in the end, I think also you're as VCs merit, the merit is of success that you can exit them. And I think that's also where you can bring a lot of value in is bringing that together.
Yeah.
Maybe, if we talk a bit about the means of conversation, often we're calling the boardroom this room, but actually they have our WhatsApp numbers. They call us on Sunday, 11 o'clock at night because there's some kind of emergency. So maybe from your side, if you're a board member, at least that's been my experience, you're very close also to the team, not just representing the investors' interest, but you're actually really helping them when shit hits the fan, and you're also normally the person of trust they should be calling. So how maybe do you establish this trust and relationship with the founders, Jen? Because I think I gotten to know you as a very empathetic, also VC that can actually work well with teams.
Yeah, I think the relationship building happens prior to investment, clearly. Often we're building relationships maybe 1 or 2 years before we invest. So the relationship building and the trust building is actually happening years before. And I think that's really key. So then you always strengthen it during the DD process. I think, for example, when I look back at the investment that we made into Pexapark, the process there was very competitive. And actually, one of the key ways we built trust was to run a really good process on our side. So be very clear about what we were going to do by when, and really deliver on that every single time, and just really kind of outperform the other players in the process. And that was a key way of building trust. But it can really be different for every person. So it's about finding what resonates with that founder, where do you align, and really sort of tackling, I guess, some of the big vision points up front to make sure you both have a similar view for where the company should go. Yeah, but really I see this as being something you do prior to investment. Obviously, during, you build trust by sticking to your word and by kind of, how do I say it, being consistent with the way that you behave.
Is there a sweet spot of board memberships so I think I have 3 board memberships and that's enough, and I think you have 7, right? You said?
I have had experience on 7 boards. Actively right now I have 3 and adding my 4th very soon.
So how do you feel about that? Is that the sweet spot where you can manage this and manage also their expectations to what they want from you? Or, how many, how many can one take? I don't know how many that some of the board members in the room have, but I always think you can run yourself to maximum capacity.
Also, what stage are they? Because they're a lot more work early stage than they are later stage. On some really top performing companies with very well capable boards, there is less active work you need to do. But in the mid-stage where we are, I'd say the sweet spot is somewhere between 3 and 7 or 8.
Yeah.
We've got people on our team with 8. We've got people on our team with 3 or 4. Yeah.
That sounds about right.
Yeah. But you need to be present. So it is work, yeah.
Well, it's part of also of the execution that you're doing.
Yeah.
And maybe, I don't know, from Ale's side, boards can also do a lot of harm, so like negative effects. I don't know the startups here, if you know the feeling that they can really ask a lot from you, be high in demand, they can be low in demand, they can be pragmatic. Maybe, are there like a few ineffective situations and anecdotes that you can share? I mean, we talked already a bit about the problems, but real like examples where you're like, we're in a mute situation.
Yep.
How do you navigate that? And what have maybe the situations been that you've been in that have just like, I call it like these blocking stages?
Yeah, of course. No, I have a few in mind. I mean, I'm blessed to be on a very good board, so a very well-functioning board, so I've not seen many ineffective behaviors, but a few definitely did stand out and, made me a little bit worried about how to navigate them. I think one, for sure, is board members coming not prepared or like not having, I've spent time actually looking at the materials before and clearly arriving there and like not having seen the latest board deck or whatever material was produced before. That shows like very little preparation, and it is a bit concerning. And that is typically, in my experience, the case when, someone inherited the company from like another colleague or another member. They're not necessarily so fond about it because it was not an investment that they did source or lead, and so they're less attached to it. So I've seen it in a couple of instances. I think it's not great, for sure. Other very
We have a new audience member.
I hope he's gone. Be live for that, so I think it's important that we. Yeah.
Okay, one anecdote from me. I had this happen. I once had a bug like this in the vacation in my hair, and I hate these things as well. So I have full empathy. Thanks for helping.
I think what I would add to they've got it now. Great. I think what I would add.
Are we good?
No worries. Done. Saved.
I think what I would add to Ali's point is what's particularly dangerous, or what's the most dangerous thing in my mind, is when you're underprepared but then willing to step into operational topics, right, or make strongly opinionated statements on the basis of limited knowledge. And I think that's one of the things which board members have to be most cognizant of, that they never are in exactly the same level of detail as the management team. And where boards too frequently step into operational detail, I think they can destroy trust, like with the team. So I think it's very important for board members to really keep in mind that their role is to make sure that the business is appropriately governed, and that the management's team role is to make sure that they make the right operational decisions to get the results that they've agreed with the board. So when I've seen sort of damaging situations, it's mostly been board members being too willing to step into those operational topics and not sticking to their role and kind of destroying trust, basically.
And maybe, sorry, just to add into that, because of course on the operational side, and that's I've seen, for me is one example of ineffective behaviors when you have board members that were former operators or founders. They tend to want to operate again. But then I've seen it's very ineffective. I've seen, VC investors particularly being very generous with their advice. They never built a company before. And very generous on how you should be building a company, right? Which always gets me a little, or saying things like, oh, we have seen this in other 5 companies, probably you should be doing this thing too. Like, okay, every case is very different, is nuanced, it's never black or white, it's never like your other company has hired the head of sales at this point in time, therefore your other company should be doing the same. So it's 2 different things. One is pattern recognition and recognizing patterns of successful companies and what they've done right, and maybe there is some applicable lesson for this other company, but it's not a copycat, right? It doesn't work like, okay, I've seen it in these other 7 startups, it's time for you to hire a head of sales. I heard that so many times that then at some point it almost becomes like a joke. Like every company is different. You need to look at the details of each business. You can do more bad than good by giving this type of advice. And my advice to founders is like, make sure you filter your advice as well.
Yeah.
Make sure where it comes from and distill it.
And to feed on that point, also, like, if you think about, how to give proper feedback, and let's say you're giving qualified feedback. I think both of you can give qualified feedback. How do you, sometimes you get a lot of resistance from the founders, or, I mean, I just recently had the point that you were watching them just burn cash. And I was like, I think we really have to kill. You've really verified that we don't have to do this anymore. It doesn't seem to work, but they don't take the feedback, especially the CTOs hate to trash their code. So maybe, Jen, how do you handle it when you give feedback that is qualified? You can maybe also give us an example, and the founders push back and they don't do it.
Yeah. I think this goes to the question of relationships again, right? Because when you're broaching difficult topics that founders may not see, you might need to broach it in a few different ways and a few different times in order for it to be effective. So often there's the first one, which is sort of hold up the mirror. What do you think is happening here? What do you see as the founder? And seeing if just coaching it through a conversation makes sense. I always think that's a good place to begin. If not, then, obviously it can come from different angles. Different board members can ask similar questions. Obviously, you can share observations. A great way is to actually sort of participate with founders. For example, go into a sales meeting with a head of sales and see how it goes. So you can get sort of clear observations. Other ways might be to get other impartial input for the founder. So sometimes if founders are not hearing what I have to say, sometimes I involve somebody else with even more credibility than me. So if somebody is not listening to me, then I bring in, a great founder, somebody who's done it before, and I see what they think and I get them involved in the situation. So it's more impartial, right? And I find that those strategies typically work.
So it's not just being a board member, it's also being like a bit of a coach at that point to
Totally.
navigating this.
Yeah.
I think that's very important, because it's also, if you have credible feedback and they're resistant from it, you also hope that they will act at one point, and it's a good way forward.
Yeah.
But it depends so much on the founder. I mean, we discuss this very often. Some are incredibly, keen to listen to your feedback, and some others are like, arm's length. Stay away from me. The world, I see it in this way, and there's only my way, and that's that. So there is really the two ends of the spectrum, and I think, it's. I think Jen brought a very good case on how do you deal when you're speaking with someone which is on the other spectrum, where it's very evident. I've seen cases almost really at the spectrum of people quite delusional about things. It's like, no, this is not happening. It's like, no, clearly it is happening. The numbers say otherwise. It's not clearly not in my company. Okay, so there are those cases, and it's very difficult, right? Because there is only so much that you can do in these cases, and so I think Jen had a good example. You just try to go about it using other ways. Maybe speaking with someone that you will know they trust. Their co-founder, like a management team member, like someone that they will listen to, if possible.
Yeah. And maybe also, when you're on board seat, like, you're representing often other investors, and they can also put on a lot of pressure and give on a lot of opinion. So at least there, also the startups don't realize it, but often if you're on the seat of a board and you're representing investors, boy, there can be stuff happening in the background. And that can get good, that can be nice, but it also can be nasty. Maybe now, Jen, on the board seats that you have, you have often more investors that are on the board, but also you're presenting maybe some prior investors.
Yeah.
So, what is your strategy there? What works well and what has been terrible? Because I'm just trying to put also, to set the stage, a lot of investors are friendly, but you also can very bullish investors that are just that want to push the startup, and you want to push the different direction. So I would be curious to see how you navigate the investors that are in the background.
Yeah, and it's always easier when you're not on the board to be really pushy.
Yeah.
Right. So
obviously no liability.
Yeah. So Yes, for example, with Pexapark, which is Series C transaction, I represent 3 investors in total for my board seat. So I represent all the Series C investors, and then we have two other investors that represent kind of Series B and then pre-Series B investors. So behind each director, there's actually multiple other investors. So we have exactly that context. How do I deal with it? Very practically, when there are topics to discuss, I talk with my Series C investors first, I align with my Series C investors. Then I'm aligning with the other board directors to align with the other groups of investors. Now, in that case, it works very well. And I think at the end, we sort of talk about ingredients of what makes a good board. And I think investor alignment is one of the things that make boards function well. But yeah, I mean, practically, how do you do that? You talk a lot to people, right? You have high frequency of touch points. You make sure you understand people's perspectives, and you bring that to board meetings. And obviously, people who are not on the board or not as close can be pushy about certain topics. And I think at some stages, you also have to push back to those investors. So I've also had cases where, for the Series C investors, I've had to literally say, guys, we've discussed this. I've pressed the team. This is where we're going to end, and that is it. I'm not going to take it further. And so, yeah, you have to also be willing to sort of stand up to that group, whichever group you're representing, to say this is the best that we can do.
Yeah, and stand your ground. Yeah, I think that's very important to actually be able to do this, because I think it can be very misleading for the startup, because then the other investors that are behind Jen come and flock in onto you directly, and then it becomes a real-time disaster for you to manage everybody.
Yeah, exactly. Exactly.
Ale, in your experience?
Bit of a different experience, because oftentimes in the past I sat on the other side of not being on the board, being co-invested, perhaps still being, having some certain majority rights, majority investors and all of that, and kept completely in the shade of anything and everything that was happening, even if legally, we had the same rights of the people sitting on the board. So I've been in that situation. It's really not fun because you are blind, right?
Yeah.
You are really blind. And you try to reach to all the different people, but there seems to be just not much willingness to collaborate, which is a bit sad. And I often notice that with again, I'm not trying to generalize, but it did happen a few times with US-based companies and US-based investors. It seems to be to me a bit more typically the case.
They're more like ghosting you.
Oh yeah, of course. Without, so
also investors can.
But clearly at the point you're not going there with your lawyers. No, I want to see the last. I mean, you need to be pragmatic. You need to be pragmatic about things, particularly if the company seems to be doing well and things are going well. You're going to stay pragmatic. Clearly, you're not going to engage in legal battles. So I can tell you that there is a very, there are differences in the spectrum. There's been other cases where we've been invested in companies, and then the founders were actually way closer to us than their board members, and they were texting to us and be like, "Oh, this guy sitting on our boards wants things super structured and super done in a certain way, and I'm never feeling like at ease bringing up certain topics or talking freely at the board because I will be attacked." So, there is all type. I've seen quite a few things. I'm not so sure what is the perfect alignment or perfect solution. I think it would be great if everyone communicates, along the line.
I think we heard the perfect solution.
Exactly.
It sounds like what Jen is doing.
Lots of communication, but communication needs to go both sides, and so
it takes time as well, right?
It does
put
take
a lot of time into this alignment.
Yeah.
But I think what is interesting when you're thinking about maybe. Also, I'm going to be opening up for questions, so think about it. But one topic that we didn't discuss is, also board setups. And I think sometimes you also have a very over-rearing board that eats a lot of time, and you guys have seemingly the pragmatic approach to be very lean on it. But if you think, how is the best board set up? What are the key ingredients of also the members that you have in them? So because sometimes, I guess in an early stage board, I don't know, you have maybe 3 people, and in later stages, probably you're 5 often. So how is the best setup for you, Ron? And what are the key ingredients to make this magic work? Just kind of as my last question for you before I open up for the Q&A.
I think obviously this varies a bit by stage, but reflecting on my more effective boards, I think they have a bit of the market/customer sense. So you have somebody who brings sort of external market knowledge into the boardroom. Obviously, you have the investor mindset, which brings, I think, really sort of the goals, the vision, like the end perspective. And then you're building sort of also operating capability into the board as well. So somebody who's more experienced than the founder, who can guide the founder, I think is very helpful. So independent chair, something like that. You certainly need an independent voice as well. I think the key thing is balance, right? So it's about having multiple voices, slightly different, that enable you to get to good decisions, not having anything overbearing, not having any, for example, sort of let's say, embedded relationships like father and son or like husband and wife, like making sure that there's an equal balance in the boardroom, I think is super important. Yeah.
I think in addition to what Jen said, which I 100% agree with, total transparency.
Yeah.
I think that's really key. And I know it sounds obvious, it's really not.
Yeah, but you can't help if you don't know.
You don't know until you know.
Yeah.
So I think total transparency is something that I cannot stress how much I appreciate, right?
Yeah.
Like the willingness to just come and opening your books, your account, literally just doing these things goes a really long way. Being open about what's going well, what's not going well, being really open about it.
Yeah.
And not just at the board, by the way, like honestly, our founders know you can call me on Sunday night at 1 a.m. I will probably pick up the phone if there is like, just tell us. It's better that we know, and maybe we can do something about it and we can help rather than not knowing for quite some time and then it's too late to do anything about it. So that's pretty key. And then I think for me it's very effective when the founders or the CEO at the point, whoever is on the board representing the founding team, can make really the best use of its board members.
Yeah.
As in, it doesn't come there thinking, okay, this is my sales meeting or my pipeline meeting. I'm going to go through some details that have nothing to do with. No, he or she has a clear understanding. This is what my board members can do for me, and I'm going to use them at 150% of their time. So I'm going to ask them very specific questions. I know what their competence is. I know what their knowledge is. I know what they can do for me, and I'm going to make sure I'm going to double down on each of them for that. I'm not going to start to ask, I don't know, me, how do I do the feature in my product? Because I will not know, and you're not going to ask like the investor, the build companies before, like details about how do I raise my Series C, how should I be thinking about the financing of my company? None of that, right? Like you just are very clear on who is who, what they can do for you, and at the point you fully understand that. And you can just make the best use of your board members for very strategic decisions, which is what I'm hoping our founders use us the most for.
Totally agree. Yeah. Great.
Well, then what I'm going to do in the Q&A, is the microphone working? Oh, great. Okay, great. So we can hand it around. So who has some questions? Yes, please. Ich lauf hin.
Great discussion and enjoyed some of your anecdotes. Maybe would you give any advice on the optimum number of board members and the composition between founders and professional board members versus purely investor board members?
I mean, small is beautiful, I think, with boards, because it really enables you to have deeper discussions. So you want it as small as it can feasibly be. I think there's probably a sweet spot number between like 3 and 7, right? But it typically gets bigger the bigger you get, but you have to kind of, I would say, really limit that as much as possible. And the other thing that can really help is, yes, it's great to have observers and to give people the insight into your business. So obviously, as investors, we benefit a lot from the observer positions we have. At the same time, for certain key strategic decisions, I think it's good just to let the observers out so that you can have those deep qualitative conversations with your board. So, transparency was a great point you mentioned, like being open about challenges. that naturally happens easier in a smaller group. So, you know, if you as a CEO feel that you need that, then let the other guys go, let it be less of a performance, and let's just get to the real meat of what's difficult today for the company. So, yeah.
So I don't think there is a magic number for the right number of board members according to the stage. I also tend to think, you know, small sometimes can be quick and effective. Certainly, I've seen boards like 7 people between board members and observers, and then sometimes management 7, 8 people really make the discussion a nightmare, because everyone is drifting the topic somewhere where is not necessarily where it should go. So I'm not sure about the magic number, but I will try and bring as much knowledge, diversity of knowledge and expertise as possible, right? Always, you will realize as a founder, some people have a very strong operating experience, some are, very seasoned VC investors, some others are independent, great for a particular knowledge of an industry or something. So make sure you have a good mix. And then when it comes to, sorry, the second question was, I forgot.
Composition.
The composition, yeah. Yeah, I think I kind of answered this part of that. Just try and have a good balance and a good representation. I kind of disagree with the point of the board observers. Like, I think I've seen different examples. Sometimes I've seen the founders, nominating one of the other co-founders as a board observer, and I think it's great to have them represented in the room. They really feel like they're part of something, and they will feel really excluded just not being in there. This takes away nothing from the executive power of the CEO, but I think sometimes it adds. I guess it really depends.
Yeah.
And then.
Isn't it also a bit stage dependent? Like early stage?
No, of course.
I think I don't know at which stage you all are, but really your first board is normally like 3. 1 maybe investor related, 1 neutral, 1
But I tell you what we do. Like, for instance, this is how we operate. We invest early stage. For us, it's seed and Series A. When we go in, we give a lot of freedom to the founder to choose their board members, right? Like, so we typically offer a term sheet. We say, okay, I'm doing an example. Series A company, board is going to be 4 board directors. ACE will represent 1. You choose the other 3 as you want, right? Which is extremely generous, but also tells you a lot about the founders, right? How the founders choose those other 3 people. And you'll be very surprised. Like, one would think, oh my God, the founder is going to bring all of his best friends into the room, so he's going to make sure that they're going to. And actually, it's really not the case. And we've seen it's a very good sign seeing these very mature founders choosing really the right people. Okay, it's going to be me, it's going to be the CTO, then it's going to be this other person that I think will add a lot. It's amazing. So we give this freedom because we trust the people, and ultimately, it's up to, for me at least, it's up to the founders to demonstrate that he has the capacity to pick the right people to be there. So there is no enforcement really on our side.
Great. We have another question over here.
Yeah, I do have a comment, and which is also a question. Because
you're also a board member.
Yes, I have been on several boards, and many boards usually I'm brought in by the founders as the independent chair. And what I'm missing from the 2 of you ladies to say, in my experience, the most important thing is that you do have a chairperson who manages the board properly. And most of the time, it's not the CEO founder.
Yeah,
that's interesting.
And in my case, it's just coincidence. The CEO founders themselves decided that they want to have an independent chairperson and not themselves. And then, yes, it's about composition from VC representatives and others, a good mixture.
Yeah, no, totally agree. I think the independent chair is really important, especially when you get more investors, like these different stakeholder groups that Isabel was mentioning. The chair can be really key in helping to navigate all of that and take the load off the founder, CEO. And also, I think they're impartial, but they are, let's say, often the coach to the CEO founder. And I think they play a really important role often in being that trusted advisor in the background to help interpret. Let's be honest, I mean, sometimes the investor advice is really unhelpful, okay? And it is also a shield for that.
I fully agree, it's well said, yeah. And also, you mentioned it, but at the same time, legally, and also by corporate governance, it's crystal clear. As a board member, you represent the best interest of the company and not your VC fund.
Totally.
Right? And this is and only independent board member can make sure that is happening.
Yeah,
right?
to keep people honest. Yeah, we didn't dive into that much in the end because in the end we are always representing these two interests and we wear the two hats. Yet most of the time they're aligned, or often they're aligned. And the cases where they're not aligned, then it's very important to have the right people in the room to make sure that that's managed appropriately. And one of the things that I've seen done very well when that's the case, when you're talking about sort of like downside situations, sort of fundraisings in distress, these kind of typical situations where existing investors are having to put money in punitive terms, then it can be very good to separate the board director from the investment firm, right? So you actually have a different person managing that investment decision versus compared to the director. So you avoid that conflict. But I see that as really being like best in class conflict management, and it's not often the case.
Please.
From a startup perspective, I also learned some lessons. Phil too started before, was on the board, needed to do a liquidation with an inactive founder, and now with the third company, I'm not on the board of my own company. And so we discussed about that with Thomas at another event. How do you as a VC perceive that if the founder team, nobody is on the board, and we have an independent board member that's taking the decision, and they can fire us if we're not performing? So how do you perceive that as an investor?
Stage?
Seed stage.
It's very early. I would say it's very difficult. I think at seed stage, that is my opinion, by the way, I'm just going to say it. I'm sure others will disagree, but at seed stage is often even having a board is not necessary. I've seen seed companies being incredibly effective, incredibly fast, and actually by not having 4 people having to sit there every quarter asking for board decks and all that, it's an annoyance and a slowdown more than anything. So even having a board, I would put a question mark already on that, depending on what type of company you're building, which I do not know. And then the other thing is at the beginning you want to have, as a founder, you want to have as much control as possible, because that is going to get diluted over time as you continue to raise more money, potentially. So not having that representation from day one, from the beginning, is, in my opinion, is not great.
Yeah. Well, I would say that, if the board is firing the founder at seed stage, game over, right? So there's no company then. I think really early days, if there's institutional money in board and you have to formalize a board, then I like the construct where you have sort of one independent chair that's obviously close and very sort of symbiotic with the founder, at least one founder, and then maybe one investor, right? So you have basically still the possibility of founder control. That's when I've seen it work well. I think at the early stages, basically you're backing founders. So if you're not letting them run the business, you've made a mistake at the beginning. Yeah.
Thank you.
We have another. I'm going to take one more question with one fast answer. Okay.
That's difficult for us, you can tell.
If there are no, I put it, okay, everybody's like,
yes, no questions.
no, okay. Well, then I'll go over for final statement. Do you have, wow. Or look, there was one new lady. Can we give it to the lady that over there? Throw it. Okay, here you have this.
She's recovered.
I'm just. Okay.
Okay, thank you to the two that helped me with the Bumblebee. And then on top of that, I just was wondering, it's more from a career perspective. So when did you feel confident you could sit on a board seat and be, now I know what it means. I know what my
Great
quests
question.
are and so on.
It's impossible to answer this quickly. Sorry, this takes like a good half an hour or something like that.
Well, you're never ready.
Don't wait until you feel confident to take that responsibility. If you are nominated or if you have the chance, go for it. Because the way that you learn how to do it well is to do it, right? And you can obviously get tons of coaching and advice to get you ready.
And MBAs that you don't necessarily need.
Yeah, don't wait, just go for it. Yeah. I joined my first board in 2015 when I was totally unqualified, and very young in the venture business. Just go for it.
you can learn a lot on the job. I can also attest for that. But I think you can also learn from people that have done it more often. Yeah, but really, I'm kind of like, because a lot of people ask, at least me, should I do like an MBA class for 60,000 francs and then become a board member? And I'm like, you know, if it's going to be if it's going to be a really big company, you should. But with startups, you can learn together. But really just read the legislation under which you're working. Like in Switzerland, yeah, you're liable personally if stuff fails. So you should know what you should be doing. And that's in the government structure. So read that once, understand it, and you're ready. Okay. So thank you, everybody, for being here. And thank you both for having a great conversation. Yeah. Good.
Thank you.
Wish you a nice afternoon. Our next session is with Gina.